I know how to improve your trading strategy. Yes, friends, this is the FixProfit channel and I come to you with a super tool. Now I'm going to show you a deposit turbo boost with the help of a robot assistant that gives accurate signals and reads the market. Get this bot right now, for free. The link is in the description. I recommend you don't procrastinate with your decision, because after a month you will only be able to pick it up for a fee. And also subscribe to my channel and click on the bell. I will share important and useful thoughts with you in the future. I will be very happy with your likes and comments. And right now, I'm going to do some trades, investing an amount ranging from $800 to $1,100 in each of them. Let's go. I'll summarize the results when I'm done. Active buying. This is a signal from FixProfit. In the detailed report we can see data on 12 key market indicators. Now bullish trends prevail. I am listening to the recommendations of the neural network and will enter every trade according to them. The frequency of data updates in the robot is 1 minute. This is convenient, because if you use longer time frames, you will be able to update the information right during work. Guys, besides the free bot, you will have access to my exclusive chat with forecasts and analytics via the link in the description, but that's not all. You will also have access to a very useful promo code for plus 100% to deposit. That is, for example, if you deposit $50 you will get $50 bonus on top of that. Promo code works on the first deposit. Big data and hidden market trends, the future of currency pair trading. Let's talk about it. Before we dive into how big data is changing the game, let's start with something more fundamental: money management. You can have the best data, the smartest algorithms, and access to market insights that others don't. But if you don't manage your capital wisely, none of it matters. The 1 to 2% rule is the foundation of longevity in trading. Never risk more than 1 to 2% of your deposit on a single trade. Why? Because trading isn't about winning once. It's about staying in the game long enough to win consistently. Imagine you're a race car driver. You have the fastest car on the track, the best tires, and perfect weather conditions. But if you push too hard into every turn without control, what happens? You crash before you reach the finish line. Risk management is your traction control. It allows you to navigate the twists and turns of the market without losing control. So, before we move forward, make this commitment to yourself. I will protect my capital. I will trade smart, not reckless. I will play the long game, not chase quick wins. Because the traders who last are the traders who win. Now, let's talk about the real revolution in trading, the rise of big data. We live in a world where every click, every transaction, every movement generates data. And this data, it holds secrets, patterns that the human eye alone would never be able to see. Big data is like having a high-powered telescope in the middle of a stormy sea, giving you visibility where others are trading blind. Markets move based on billions of data points, economic reports, interest rates, geopolitical events, news sentiment, and even social media trends. But the challenge? There's too much information for any human to process alone. This is where big data analytics steps in, allowing traders to see beyond the obvious and uncover hidden market trends before they become mainstream. Let's break down how big data is transforming currency pair trading and why traders who leverage it have a serious edge. Imagine if you could predict market shifts before they happen. Not because of gut feeling, not because of a lucky guess, but because you have access to millions of data points that reveal a pattern before it becomes visible to the masses. This is what predictive analytics does. Big data systems analyze historical trends, news sentiment, economic indicators, and trader behavior to forecast where a currency pair is likely to move. Think about how meteorologists predict hurricanes. They don't just guess, they analyze pressure changes, wind speeds, temperature shifts, and satellite images to create a high probability forecast. Big data does the same thing for the markets. Example: if high-powered analytics detect that a currency pair historically drops every time a certain economic report is released, traders can position themselves ahead of time, rather than reacting after the move has already happened. The result? You don't chase trends, you catch them before they form. Folks, take part in our new big contest with a valuable prize $1,000 for one random comment. The conditions are simple. Watch this video in its entirety, give it a like, subscribe to the channel and write one comment on the topic of trading under this video. I will choose 2 winners using randomizer and publish the results in my Telegram channel, where our team also shares knowledge about trading and helps traders to learn. The link is in the description. Subscribe. The contest is held every week. The market isn't just driven by numbers, it's driven by human psychology. Fear, greed, panic, excitement. These emotions play a massive role in why prices move the way they do. Big data tracks and analyzes emotions across news articles, social media, financial reports, and trading discussions to gauge market sentiment in real time. Is the market overly optimistic? It could be nearing a peak. Is fear spreading after a news event? It might be a buying opportunity. Imagine having an AI-powered assistant that scans millions of tweets, news articles, and financial reports, detecting shifts in market sentiment before price action even confirms it. Example: if thousands of traders start tweeting concerns about a country's economy before the official news breaks, big data can flag it early, allowing traders to react before the majority catches on. The result? You're ahead of the emotional curve, not behind it. Let's be honest, speed matters in trading. A delay of even a few seconds can mean the difference between getting the best entry or missing an opportunity entirely. Big data-powered trading platforms process millions of data points in milliseconds, allowing traders to make real-time decisions with precision. Example: imagine trading during a major economic announcement. By the time most traders react to the news, big data algorithms have already processed the impact and executed trades accordingly. The result? While others are still reading the headlines, your trades are already positioned. Alright, folks, I've completed my 5th trade. 5+ trades, 5 accurate fixed profit signals. That's great, the boost is a success. But I want to do one more trade to build on the success and scale it. I'm investing $8,000. Active selling. This is a new signal from the bot. This is a tool with which you will really start to earn. Profitability of its signals on average 80%. Look at the channel with reviews. How much people earn? The link in the description. Not all trends are obvious. Some of the most profitable moves happen in ways that only advanced data systems can detect. Big data systems scan thousands of market conditions, price correlations, and unusual trading activities to uncover patterns that traditional analysis would miss. Example: suppose a hidden correlation exists between oil prices and a certain currency pair, but it only happens under specific conditions. A big data system would detect this anomaly, flag it as an opportunity, and allow traders to profit from a pattern others don't even know exists. The result? You're trading on an entirely different level, seeing patterns invisible to the average eye. Meanwhile, I can analyze my result after 6 successful trades. The bot helped me earn a wonderful amount of money in minimal time, $11,684. Yes, you have seen the power of neural network on a live example, and you can right now pick up the bot for free at the link below the video. Subscribe, click on the bell and give it a like. I'll be back to you soon with more thoughts.